Good evening, everybody. Welcome back to my YouTube channel. Thank you for being here, guys, for tuning in. If this is your very first time, though, please feel free to like and subscribe to my channel. Smash that notification bell so that you can get notified anytime I put up a new video. But welcome once again. Now, guys, this video is very simple. Today, I want to talk about stop loss and how to set the correct risk when you're trading. Okay, now why I'm doing this is because for those who know me, I talk a lot about risk management and stop loss, using stop loss correctly. And the reason being is when I started out trading, I wasn't very keen on it. And as a result, I ended up making a lot of mistakes in the market, and especially trading without stop loss, trading with zero money management, trading with not knowing which lot size I should be using. I was just getting in and out of the market with whatever lot size I felt, I should use for the day if I wanted to make money. So guys, there's a way to actually do this properly, and I'm hoping that by the time I'm done with this video, you'll be able to see that and adopt it on in your own trading. So basically, there are different ways. So let me just give you a quick summary. Um, so let's say, for example, you have an account of, let's say, let's say you have an account of $1,000. I'm just using $1,000. Doesn't mean that everybody starts with an account of $1,000. You could start even with $100. Now, usually I tell my mentees or students in my classes that you should always risk 1 to 3% of your account, just 1 to 3% of your account at a time. Now, some people will take that to be occupying. If it's 1% of $1,000, that's $10, makes sense. Um, if it's 2%, it's $20, and so on and so forth. Now, let's use 2%, okay? Or let's say 3%. Let's use 3%. 3%. So that's a capital. My risk is 3%. So how do you how do you correctly, let me just decrease the font here a bit. How do we correctly um, how do you correctly allocate the right lot size? So how do we calculate the correct lot size to use vis-a-vis our risk? Okay, because you could be risking 3% with the aim of, let's say, that's $30, right? That's $30. But you may use a lot size, okay, that does not apply. So let's say, for example, you use 50 pips. Depending on your lot size, 50 pips could be $5, it could be $50 bigger than your risk, it could be $500, it could be $5,000. Okay, so let's say you set your SL, and I'm giving a generous stop loss target here of, let's say, 50 pips, especially when you're trading assets like gold and indices. You may need some wiggle room when it comes to stop loss, especially if you're not yet used to, or you've not yet fine-tuned your entries as yet. So with a 50 pips stop loss, okay, let's first break it down before we go there. So technically, we all know that 10, hope you can see this. So we all know that 10, or maybe you don't know, but basically 10 points, okay. If we did your beginner class, you went through this, you even went on babypips.com, we learned how to calculate pips and points and things like that. So we know that 10 points is equal to 1 pip, okay, as a standard, okay. 10 points is equal to 1 pip. So if you use an SL, okay, of 50 pips, okay, our SL is 50 pips, then that means, okay, 50 times 10 is 500 points, okay, is equal to 50 pips. Make sense? I hope so. Now, what you need to do, risk, this is the calculation. To get your lot size, okay, the correct lot size on this account of $1,000, you're risking $30, okay, or 3%. To calculate the correct lot size to use, this is the calculation, okay? Lot size equal to risk divided by, okay, by the points. Not the pips, the points. So it's good to know that 50 pips is 500 points, okay? Then you divide the risk, divide by the points, and you'll get your correct lot size to use. So in this case, therefore, okay, our lot size, risking 3% of our account, maybe you putting a stop loss of 50 pips, will be, okay, the risk is what? 3%, which is $50 or 50 divided by, sorry, 30. The risk is 30, 3%, $30 divided by, or 30 divided by 500. Okay, and that will give us, so let me just do that calculation on my, that will give us 0.06. Okay, so this is the correct lot size to use when you're trading $1,000 and you're risking 3%. Okay, so that means that if this trade hits 50 pips at 0.06 lot size, you're only going to lose $30. So this is the correct way to calculate your risk. So let's use another example, okay, so that maybe we can retain this in our memory. So let's go down to a smaller amount. So we are working with $100, okay? And let's say the $100 we are risking, and obviously you can play around with your risk. Let's say this time we're risking 2% of your account at a time, okay? Or per trade. So that would end up being 2% of 100 is $2, right? So that's $2, okay, that you're risking. And you're still using an SL of 50 pips, for example, okay? Now, remember, calculation is the same. 10 points is equal to 1 pip. So 50 pips is equal to 500 points, right? We've already done the calculation, so I'm not really thinking about this right now. Okay, so that's 50 pips. Equals as well. Okay, so that's it. Now remember, so what lot size are we going to use? We're using the same calculation. Lot size is equal to risk divided by the number of points, right? So therefore, okay, therefore, our lot size, our correct lot size to use on $100, risking 3%, 2% of your account is gonna be 20, because it's 2%, right? Sorry, 2, this is on $100 account, 2 divided by 500, okay? Which will give you 0.0004. Now, if you, for most brokers, you won't find like a cent lot size like this. Like the minimum lot size will be 0.0001. So now technically it means that you can't risk 50 pips on your account. Like literally that's what they're telling you, that if you're gonna risk with certain brokers, you'll not be able to do this, to put a lot size of 0.004. So that means you need to reduce your SL, your stop loss, if you want to be able to continue to risk 2%. Because the mistake most traders do is they focus on the 2% as opposed to the stop loss, okay? And as opposed to the lot size. So they focus on the pips that they want to lose, but they forget about the lot size, okay? So because technically, if you just do it the other way, like the way I know I used to do this before, I'd be like, okay, I'm risking 50 pips, so I'm gonna lose $100, okay? And that time I'm like, okay, but I'm risking 2%, which is $2. Doesn't make sense, guys. So I hope this on the basic level makes sense, okay? Now, if you're to go to another way, is to go to the chart here, like we have our Euro NZD here, for example, right? We are targeting 50 pip stop loss on this trade. You can use a tool called the ATR. So let me just, I don't use it, but for those who are interested in using indicators, you could use the ATR. So let me just search for it, which is the average range. And we can see it here. So I'll be like, okay, so first of all, let me just push this down a bit. So first of all, okay, so let me look at this trade here. Euro NZD to me is kind of looking bearish. So I'm looking for entries. We're on the 4 hours, so I'm looking for entries for Euro NZD to go down, right? Like I'm looking at this and seeing it took this out this low, took out this low, and then pushed up, came back down, did quite break structure. But what I'm seeing is, there's a potential for it to maybe push lower. But regardless, yeah. So let me play this out. So I'm seeing it respecting a zone up here. So I'm expecting a bit of a rejection here. So I'm just waiting for, if you watch my previous video, I've shown you guys how to get into the market on a trending market. What you should be looking for. So let's see, just waiting for that. So there's the candle formation, right? 1, 2, 3 formation right there. So I would possibly put my entry here on the close of the bearish candle. Now you could use your calculation of pips, and say put your pips at 50, okay, and using the correct lot size that we've already 0.06 if you're on a $100 account. Or you could also put your stop loss above the previous high, although that tends to be very, very huge. I know you're on the 4 hour, but you don't really want an 81 pip stop, right? Or alternatively, you could also use the ATR. So I just wanna, based on this candle here, I'll just hover over it and I'll be like, I can see my ATR is telling me, wait, hold on, let me see the ATR is 0.0051, okay? So usually you multiply it by 2, okay? Because 516, that's about 50 pips, still giving me, let me go to a lower time frame. This would be like a really huge stop loss for me. But you can actually, okay, so that's 51 pips. I usually multiply it by 2 to put so that's about 100 pip stop loss, which is not far from the previous high, okay? Okay, previous high is here, so it's just slightly above the previous high. And then you do a risk of 1:2 at a minimum, about there, so 280, 200 or more, yeah? Usually I like a 1:2 risk to reward or 1:3 risk to reward at a minimum. So you can use the ATR as well. Obviously this is high, but you see we're on a 4 hour chart, so it's a bit different if you're trading on a lower time frame. If you go on a lower time frame, the stop loss would be tighter, but you'd still use the same concept. Look at the candlestick over the ATR where the candlestick is, and you'll be able to get your ATR number, which is 513, which is 513 points, 51 points. You multiply by 2, that will be your stop loss. So in this case, 100 pips. But I don't like using the ATR personally, because I feel like sometimes the pips count to be very, very high. So I just prefer to use other, like possibly previous high here, 85 pips. So that's a bit smaller. Or I use the fib extension tool. Sorry, the Fibonacci extension tool, and then I'd probably put my stop loss. This is if I use a fib tool in this case, my entry would be, so I'll probably enter a bit lower and put my entry at the 100% on the fib. So that's also another way you can do it. Yeah. So basically, either use the ATR, use your fib tool. Okay. So if you look at the fib tool, I've put it on my swing high, to my swing low here, and then I could even put it on this specific swing high, and then obviously my entry would be a bit lower, but I'd put my stop loss just at the 55, at the 100% or the 1% level, one level here, which is usually 100% on the range. So that's another way, okay? Or put my stop loss above previous high, or use ATR, like I said earlier, and multiply by 2. But now, guys, the thing you need to understand is, in as much as you're going to do that, ensure that you're using the correct lot size, because that brings in the aspect of money management. Don't think that you're risking 2% of your account, okay, which is whatever amount that is. The minute the lot size does not tally, or it's not correct, you end up actually using more, or rather risking more of your account without you knowing. Okay, so I hope this short video kind of explains how to apply your or calculate your lot size, so that you know what kind of a risk you want to take, how many pips you're willing to lose with your stop loss, because that will really, really ensure that at any time, whatever your risk is, it will always be 2%. Okay. As long as you do the calculation of the lot size correctly, your risk will always be 2% or 3%. But if you don't do the lot size calculation correctly, you could be thinking you're risking 2% of your account, but your stop loss could be such that you're actually risking 10% of your account. Okay. So again, that's it for today. Hopefully you found value. If this makes sense, guys, please, by all means, like, subscribe, and then also share it with anyone. Share this video with anyone out there who you think maybe at a beginner level, and maybe wanting to just understand stop loss and how much to risk in the account and how to calculate their lot size. So thank you, guys, and see you soon.